we're going to be working on the Chapter 1 practice worksheet. And part of that, we're going to be using our adjusted trial balance here to go ahead and create our income statement, statement of owner's equity, and our balance sheet. So before we jump right into the statements, let's go ahead and talk about the adjusted trial balance. If we know how to use the adjusted trial balance, it gives us a lot of the information in the order that we need it to go ahead and finish out our statements. So let's go ahead and break this item up. Come down here, we see we've got cash, accounts receivable, supplies, accounts payable, and capital. I'm going to go ahead and put a line right here. Because I know starting with, once we get down to capital, anything above it, this is going to be on our balance sheet. Then I'm going to go ahead and come down here, drawing. And I'm actually going to draw a line up right here that encompasses capital. These two items right here are capital in our drawing. They're going to go to our owner's equity. And that leaves everything below drawing. Everything below drawing down here is going to be on our income statement. So understanding how this is put together breaks it down, makes it a little bit easier for us. This is when it is put together as an adjusted trial balance. Okay, there's one more trick that we need to figure out on this one. When I go ahead and we look at Kehoe's capital, we see that Kehoe has capital here of $45,000. We're going to have to go ahead and figure out how did they get up to 45 with 43 down here, that was their beginning balance. Well, if we take that 45,000 that they ended with and subtract out what they started with, we see that they had an increase of $2,000. This increase had to be a result of a capital contribution or an investment. Okay, so let's go ahead and jump into the financial statements themselves. They're going to be put together in this order: the income statement, the statement of owner's equity, and the balance sheet, just as we have laid out. That's because each one of these flows into the other. We're going to start with our income statement. An income statement is going to have two things on it. It's going to have all of our income accounts and all of our expense accounts. Ultimately, when we take our income and subtract our expenses, we're going to find our way to net income. So I'm going to come back to our trial balance over here and look at the section for my income statement. I'm going to come over to the left-hand side, my account names, and identify which ones are income and which ones are expenses. I'm going to identify income with an I and expenses with an E. So I see consulting revenue. Anything with a revenue at the end of it is more than likely going to be an income account for us. Our expenses, most likely the things that end with expense, if they're down here, they're expense accounts. So now we've indicated we've got a revenue account and our expense accounts. So let's go ahead and put this together. Our income statement, as the name implies, is going to start with income. And for our business, it's going to be consulting revenue. I'm going to go ahead and include that. And I'm going to put this over in the right-hand side. You'll see that we have our two columns here. We have a left column and a right column. I know you guys have been told now about debits and credits. These two columns are not debits and credits. It's just left-hand side and right-hand side. Right-hand side is normally going to be totals, whereas the left-hand side is going to be items that will ultimately come to a total. Since we only have one revenue account, that's going to end up on the right-hand side. And we saw from our trial balance, it's $26,700. Okay, ours is easy peasy. We've gone ahead and completed our consulting revenue. So I'm going to go ahead and cross that out. That means the only things left I have to worry about are my expenses. So I'm going to go ahead and tell the user of this statement that we are moving on to expenses. And now we're going to go ahead and list them in the order that we have them. So the first one I have is insurance expense. Then we have supplies expense. And last, we have our miscellaneous expense. I'm going to shorten that just to MISC and expense. I did say that things that are going to be totaled are going to have to be on the left-hand side here. So I'm going to have to total up all of my expenses. So the cost of each one of these is going to go in here. Going back to our trial balance, we see that our insurance expense was $10,000. Our supplies expense was $5,000. And our miscellaneous expense was $1,000. Coming back to our trial balance, I'm going to cross out all three of these, knowing that I have accounted for them. That's going to lead us to our total expenses. And since this is a total, it's going to make its way into the right-hand side. This total is going to include our insurance expense, our supplies expense, and our miscellaneous expense, which is going to be $16,000. Now, you see that these expenses are not shown as a negative number. We don't use negative numbers on this. Showing our expenses, it's shown as a whole number. But we do understand that income minus expenses equals our net income. And that's going to be our last line here, our net income. So when we take our 26,700 and subtract out our 16,000, we are going to get $10,700. And that is our net income. Hey, so we got our order here. We see that the next statement we are going to create is a statement of owner's equity. We're going to go back over to our trial balance and see the two accounts that we listed out for statement of owner's equity. We have to come back down to the note at the very bottom to start things off, because our statement of owner's equity always starts with our beginning capital balance. So our owner here is M. Kehoe. And this is going to be capital. I'm going to just shorten it to cap because I'm kind of running out of space here. And this is for 1,1X2. Same thing, concept of above. We got two columns, left and right, not debit and credit. So the capital, their beginning capital balance, that's a total. That's going to go in the right-hand side over here. We're going to have 43,000. You may say, where are we getting that from? That's down here. This gave us our beginning capital balance. Next, we're going to do the things that impacted it. So we're going to go ahead and come down and see that we have our investments. So these are going to be our additions. And we've got an investment. And that's what we calculated earlier in this, that investment of $2,000. Then we're going to go ahead and include an addition for our net income. That came from our income statement above, and that's our $10,700. Okay, now I'm not going to drop down a line, but I'm going to go over to the right-hand side and total up my total additions here. So I had $2,000 from investment. I had $10,700 from my net income. So my total additions are $12,700. Right, I'm not going to put a title here, but I'm going to show that the impact of this, so we had 43,000 plus 12,700. We now had an increase of capital at one point up to 55,700. All right, during the year, we had withdrawals, and that's where we're going to go ahead, come back to our adjusted trial balance, and we are going to see we had a drawing account here of 8,200. Those are our withdrawals. So I'm going to indicate this as a less over here on the left-hand side. Withdrawals. And since that's the only subtraction I have, I'm going to leave it in the far right column. 8,200. And this is going to give me my M Kehoe capital for 1231x2. So we saw the dart 8,200 here is not going in as a negative number, but we do understand with the less in front of the word withdrawals, it's going to be a subtraction from that 55,700, knowing that we are going to end up with a capital balance of $47,500. All right, now we can go ahead and move on to our last statement, which is going to be our balance sheet. I can cross off drawing. I'm not going to cross off capital yet. It's going to make its way down, but it's going to come down from our statement of owner's equity. So I don't want to forget about it, so I'm not going to cross it off yet. When we get down to our balance sheet, I always like to go ahead and start with our assets. So I'm going to come back to our trial balance, and I'm going to indicate what each type of account is. That way I can make sure I get it in the right category. Cash is an asset. I'm going to put an A next to it. Accounts receivable is an asset. That's going to get an A. And supplies is an asset. It's going to be another A. Accounts payable, a liability. I'm going to put an L there. And capital account is an equity account. Okay, don't confuse that E with the expenses down below. Now we're going to go ahead and put together that balance sheet. I'm going to go ahead and start with the assets. I'm going to look at my trial balance and see that the first one that I have is cash. So we're going to put cash in here. And cash is for 10,000. The next one we had was accounts receivable. I'm going to shorten that to ACCT receivable. And that's for 44,000. All right, and then we had supplies was our third one. For 1,500. That's going to give me my total assets, since I have nothing else listed over there as assets. I'm going to add these all together, and I get 55,500. I'm going to come up here and cross them out, back to my trial balance. All of these have been taken care of. Let's go over to liabilities. I see that I only have one item listed as a liability, my accounts payable for 8,000. So I'm going to go over here and put accounts payable. Again, I'm shortening the word account just to ACCT because I have a lack of space. And that's for our $8,000. Okay, equity. What's going to make its way to equity? I can cross out the payable over here. Move down to the next one. I said I'm not crossing out capital because I don't want to forget it. That's because our M Kehoe capital comes over here. You see there's no date on it, just as the name is over here on the trial balance. M Kehoe capital. But I'm not going to use this 45,000 from the trial balance. I'm going to use this 47,000 here from the statement of owner's equity. That's 47,500. So we're going to carry that down. 47,500. That's going to give me my total liabilities and equity. I'm going to add these two together, the 8,000 from liabilities and 47,500 for capital, and we end up with 55,500. What I'm going to do as a final check, make sure that my total assets over here equals my total liabilities over here. I see that they do. They are both 55,500. It doesn't mean that I made no mistakes, but it's a pretty good indication that we have something correct. So we can go ahead and finish it there.